Bismillahirrahmanirrahim. First of all, with the great name of Almighty Allah, who is the most kind and merciful, my respectable teacher, Ma'am Indra Mughal, and all my class fellows, Assalamu alaikum. My name is Zishan Ali Memon from Sindhi University campus Ladkana. So today here is a presentation day. So my topic and subject of this presentation video is Principles of Insurance. For final term video submitted to course instructor of this subject, Ma'am Indra Mughal, the department of BBA means Bachelor of Business Administration, and my roll number 56. And all are you know that all universities are closed due to pandemic COVID-19. So our campus decided to every student give online presentation videos for final term. So we make a video for final term. Now contents of this presentation. First of all, now here is the mentioned what is insurance. After that, here is mentioned in the second line what is a life insurance and what are the types of life insurance. After that, in the third line mentioned here what is a general insurance and what are the types of general insurance. After that, last one is what are the agents and brokers. So let's come we discuss all these contents one by one. So simply, so further see. Now what is insurance? First of all, what is a introduction of insurance? So insurance is a contract that represented by a policy in which an individual or firm entity receive and in which a firm or entity receives a financial protection or reimbursement against losses from an insurance company. The company pools cleans risk to make payments more affordable for the insured. So in other words, we say that insurance is an arrangement with an insurance firm under which you pay them regular amounts of money and they agree to cover your costs if a certain unfortunate event occurs, for example a traffic accident, damage to property or illness. The insurance benefit means claim paid will help you or your family to overcome the financial difficulties or increased costs that may arise from an insurance event. So that we are called the insurance. The price you are to pay for this service is the insurance premium. The person who takes out an insurance policy and pays insurance premiums is called the policy holder, that we are called the insurance. Now advantages of insurance. So there are many advantages of insurance number 1, providing protection, number 2, providing security, number 3, investment element, number 4, distribution of risk, number 5, loan facility, number 6, encouragement to savings, number 7, help in economic development of the country, number 8, more employment, number 9, rebate in income tax, and number 10, loss prevention activities, number 11, spread of risk, number 12, stabilizer of organization, number 13, provide basis for it, number 14, encouraging international trade, number 15, affording peace of mind. So these all are the 15 advantages of insurance. Now the disadvantages of insurance. So there are many disadvantages of insurance, but we discuss about main disadvantages of insurance. So number 1, it does not compensate all types of losses which caused business to insured by insurance company. And number 2, it takes more time to provide financial compensation because lengthy legal formalities. Number 3, although insurance encourages savings, it does not provide the facilities that are provided by a bank. Number 4, sometimes the total amount of premium might be higher than the policy amount. receivable on maturity. So these all are the disadvantages of insurance. Now the characteristics of insurance. There are many characteristics of insurance. Here is a we tell about the some main characteristics of insurance. So number one, it is a contract for compensating losses. Number two, premium is charged by insurance contract. Number three, it is a contract of good faith. And number fourth, it is a contract for mutual benefit. Number five, it is a future contract for compensating from losses. Number six, two parties are involved. And number seven, free from expected risk. And number eight, the ownership not compulsory. Number 9, sharing of risk. Number 10, evaluation of risk. Number 11, transfer of risk. Number 12, social device. And number 13 and last, the protection against risks and losses. So these all are the characteristics of insurance. Now what is life insurance and its types? So first of all, what is life insurance? Life insurance is a contract between an insurer and a policyholder in which the insurer guarantees payment of a death benefit to named beneficiaries when the insured dies. So that we are called a life insurance. In other words, we say that life insurance is a legally binding contract. So that is called a life insurance. Now the types of life insurance. There are many types of life insurance, but we discuss here is mentioned some main types of life insurance. Number one, term insurance. It is the most basic type of insurance. It covers you for a specific period. Your family gets a lump sum amount in the case of your death. So that we are called the term insurance. Number two, whole life insurance. So what is the whole life insurance? It covers you for a lifetime. It covers you for a lifetime. Your family receives a certain sum of money after your death. So that is called the whole life insurance. And number three, the endowment policy. What is endowment policy? Like a term policy, it is also valid for a certain period. A lump sum amount will be paid to your family in the event if you are dead. So death is must in the insurance. So that we are called the endowment policy. Number four, money bank policy. A certain percentage of the sum assured will be paid to you predictably throughout the term as a survival benefit. Your family gets the entire sum assured in the case of death during the policy period. So that we are called the money back policy. Now the number fifth, unit linked insurance plans, ULIPs. In short form, ULIPs, unit linked insurance plans. So what is unit linked insurance plans? Such products doable up as a investment tools. A part of your premium goes towards your insurance cover. The remaining amount is invested in debit and equity. A lump sum amount will be paid to your family in the event of your death. So that we are called the unit linked insurance plans, ULIPs. So number six, child plan. So what is the child plan? This ensures your child's financial security. In the event of your death, your child gets a lump sum amount. So that we are called the child plan. Number seven and last, the pension plans. What are the pension plans? This helps build your retirement fund. In the case of your death, your family can claim the sum assured. That we are called the pension plans. Here seven types of life insurance. So that's all. Now what is general insurance and its types? So first of all, what is general insurance? A general insurance is a contract that offers financial compensation and any loss other than death. The insurance company promises to you a sum assured to cover damages to your vehicle, medical treatments to cure health problems, losses due to theft or fire, or even financial problems during level that we are called the general insurance. In other words, we say that simply put, general insurance offers financial protection for all your assets against loss, damage, theft, and other liabilities. It is different from life insurance that we are called the general insurance. Now the types of general insurance. There are many types of general insurance, but we discuss about some. Here is mentioned 5 types of general insurance. So number 1, health insurance. This type of general insurance covers that cost of medical care. It pays for our the amount you pay towards the treatment of any injury or illness. So it is called the health insurance. In other words, we simply say that it usually covers hospitalization, the treatment of critical illness, medical bills prior to our post hospitalization, that we are called the health insurance. Now the second, motor insurance. So what is the motor insurance? Motor insurance is for your car or bike. What health insurance is for your health. You can also get motor insurance for your commercial vehicles. There are two types of motor insurance. One is car insurance and other is a two-wheel or two-wheeler insurance. So number 1 is a car insurance. It is a precious your car. You paid lakhs of rupees to buy that beauty. Even a single can be painful. Forget about bigger damages. So that is called the car insurance. Now number 2, the two-wheeler insurance. This is your bike's guardian angel. It is similar to car insurance. So that is called the two-wheeler insurance. So these two types of motor insurance. Now number 3, travel insurance. What is the travel insurance? A travel insurance compensates you or pays for any financial liabilities arising out of medical and non-medical emergencies during your travel within the country. So that we are called the travel insurance. Now number 4, here is mentioned the home insurance. So what is home insurance? In simply, home is a service, is a cover that pays or compensates you for damage to your home due to natural calamities, man-made disaster, or other threats or burning, etc. So that we are called the home insurance. Now the number 5th here is the mentioned the fire insurance. So what is the fire insurance? Fire insurance pays or compensates for the damages caused to your property, like or goods due to fire, that we are called the fire insurance. Hence all are these 5 types of general insurance. So we read one by one simply, so that all are these the types of general insurance. Now agents and brokers. So first of all, what is agents? Agents is someone who legally represents the principal and has the authority to act on the principal's behalf, that we are called the agents. Authority may be expressed, implied, and apparent. The principal is responsible for the all acts of an agent. When the agent is acting within the scope of authority, and also called that a property and casualty agent has the power to bind the insurer, that we are called the agents. A life insurance agent normally does not have the authority to bind the insurer, that is called the agents. In other words, we say that an agent in legal terminology is a person who has been legally empowered to act on behalf an other person or an entity. An agent may be implied to represent a client in the other dealings. So with the third parties, the agent may be given decision making authority, so that we are called the agents. Now, what is brokers? A broker is a someone who legally represents the insured and society's applications and attempts to place in coverage with the appropriate. Insurer is a paid commission from the insurers, where the business is placed does not have the authority to bind the insurer, that we are called the brokers. In simple words and in other words, we say that a broker is an individual or firm that acts as an intermediary between an investor and a securities exchange, because securities exchange only accept orders from individuals or firms who are members of that exchange. Individual and traders and investors need the services of exchanges members. So brokers provide that service and are compensated in the various ways, either through the commissions, fees, or through being paid by the exchange itself, that we are called the brokers. Now, the what is the difference between the agents and brokers? So simply there are two main differences between the insurance agents and brokers. So we read number one, agents represent insurers. Who are agents? Agents represent insurers, and while the brokers represent the consumers. So it is the first difference of the agents and brokers. Who is the say that the agents represent insurers, while the brokers represent the consumers. So number two difference here is agents can complete insurance sales. Bind coverage. Agents can complete insurance sales, means bind coverage, while the brokers cannot do this. So this is the second difference between the agents and brokers. So agents also receive appointments to represent one or more insurance companies, but brokers do not. An appointment is a contract an agent and insurer sign that outlines the product the agent can sell and for what commission. That are the agents. Now the brokers, on the other hand, can select price quotes. Brokers, on the other hand, can select price quotes from multiple insurance. But when consumers are ready to buy, they must obtain a binder directly from an insurance agent or the insurance company. That are the brokers. So here we are the read two main differences between the agents and brokers. Thank you for watching my presentation video. If any question, then ask me in write a comment in my YouTube channel. Thanks.